Welcome back to another episode of Primary Source China Investment. Peng.guo and I are happy you tuned in. Wanted to make a quick comment about what this channel's for. Why are we doing these shows? So 20 years after WTO, China is still a difficult place to invest. It's not a set it and forget it market. So every week we put out a number of topics. We try to go into depth. We'll revisit those topics, and hopefully individuals and institutions that want to invest and allocate to China will get educated along the way. If you didn't check out our video from last week, please go back and check out the last 4 minutes where Peng.guo and I discussed the Alaska meetings. Clearly, Secretary Blinken did not take our advice.
U.S. 10-year bond yield is keeping increasing. 1.9 trillion stimulus package from the Biden government is also, I think, is the major reason for the 10-year bond yield to get increasing. And this is a stimulus package, like the black hole. They absorb the market money, so the supply gets reduced. Fed cannot keep print money to support the 1.9 trillion. So that's they need another country get coordinate. So obviously China is the top country.
Today, we're going to kick off with China policy. And this week, we're talking free trade zones. What are they? What do they mean? And why should investors be interested? So Peng.guo, when I say free trade zone, what's the first thing that comes to your mind?
Most of the time, it's represented like the developed area or high growth area in certain states or province. So most like the major city or province, they have their own free trade zone. They will get the lot of the benefit. For example, office, factory, buildings, and also have some tax benefit for company as well as for the employee. So it looks like a lot of the benefits.
So it's not just for local. I mean, I read that Tesla's business is in a free trade zone.
Yeah, Tesla, like the big case or big client, is the government. Most of the time, they will give the much more benefits
right.
to the company.
Yeah, to attract those companies to their location.
Exactly.
Yeah. So one of the drawbacks, though, I mean, I was in the free trade zone in Shanghai, and I attended an auction, and I actually bought something at the auction. The problem was I couldn't take it out of the free trade zone. So although Pudong was basically all of a free trade zone at that point, you couldn't take your merchandise out of the free trade zone. So it really was a little bit confusing. It seems more of a business to business than a consumer driven location.
That's exactly right. Free trade zone suppose is to business rather than individual consumers.
So from an investor perspective, when you say different places, different free trades, there's 20 of them now. So different free trade zones, different places are focused on different things. I know that Beijing and Zhejiang are focused on technology and digital innovation in China, whereas like Anhui and Hunan may be more on the manufacturing side and artificial intelligence. So from an investor perspective, what does that mean? How should investors look at this?
For example, like the Anhui province. So they are quite successful to do multiple manufacture business. So they most recently they attract like the car manufacturer in Anhui province. And so they understand the sector, understand the industry very well. So it's really built like the ecosystem and the sync with the sector. That is how Anhui get a success.
Yeah, Amway has been a long time manufacturer of auto parts and fully integrated supply chain. Yeah.
Yeah, but it's very hard and make the decision at the starting point to invest a lot of money and choose right direction.
Right. I was at the free trade zone in Fengshan also, and that never took off, it seems like. So
yeah, investment is still rely on the people.
Yeah, exactly.
That is how we create the value.
So I also mentioned that there's something like 20 free trade zones, but one more recently is Hainan. What's your thoughts about that? Is this real, or is it going to be one of those sort of non-starter free trade zones?
Hainan is a very unique free trade zone. This is the largest free trade zone in China. That means the whole island is the free trade zone.
Right.
So it's Hainan very unique. It started a totally different legal system. So the China just started the first law for the Hainan. They specifically created a new one. In 2025, the Hainan will be closed. So it will be like the offshore free trade zone area, similar like the Hong Kong. So 10 million people will be the offshore residents. The governance should quite close to the international standards. So that is totally different from others.
So next up this week on capital markets is the IPO market. So the IPO market in China is not specific to China alone. As a lot of our viewers probably know, there's a lot of Chinese companies that go public in the US. However, the China public market is a very interesting place for onshore investors because onshore investors are used to getting a pop, they're used to getting a return, and the IPO fund space has become a sort of quasi risk-free rate of return. So we're going to get into some of the numbers in terms of size, how many IPOs. The number of IPOs from China-based companies is running about 40 a month. Might be in Shenzhen, might be in Shanghai, might be on those new exchanges, also might be in Hong Kong, might be in the US. So peng.guo, from an on-the-ground investor, what are those investors thinking about IPO fund and how can foreign investors access that?
Foreign investors, they still has no difference either investing in IPO fund or in other regular fund. The process should be the same. But the good thing is downside risk is pretty low, especially after the fundamental screen.
On the IPO markets now, I guess on Star Market, did they take away the 10% up daily move or 10% down daily move, or is that still in place?
In Asia market, this is a 10% cap on the daily basis. But in the Hong Kong as well as in the US market, they don't have the restriction on the 10%.
Yeah, because I saw this like Qing Cloud went public on Star Market and was up like 53% on the first day.
That's exactly right. That is why we want to. That's why many investors want to invest in the IPO fund.
So when you invest in a fund like that, you're keeping your money on the side and looking for the manager to get an allocation to stock.
That's right.
Okay.
And also, by the same time, like a larger mutual fund company, they can also get a share of the IPO stocks.
Right, because they work with the securities firms when the issue goes out.
That's right, yeah.
Okay, so not to put you on the spot, but is this something that foreign investors should be looking at, or do you think maybe hold off and wait for these companies to be a little bit more mature?
Most investors, no matter in China or in other countries, it's harder to find a good way to invest in the IPO. If you come too early, you might be like the private equity investor. But if before company go to the public, you may make much less, but the risk is also significantly reduced.
I also heard a while back, there was a big queue of companies waiting to go public on the mainland. Is that still the case?
Sooner or later, this just for the equity market, it will grow very big, and also have the bond that is having to do too much work. So that is why investors need to pay attention to the China market, because this is probably potentially could be the largest market, and also any good companies. So you can also find whatever you want in the capital market, which is much easy to do the investment.
So next up in Chalk Talk is a discussion about the RMB. And the RMB, China's currency, does not exist in a vacuum, clearly. And there are a number of factors that are interrelated, such as policy on the ground in terms of preferential treatment for Chinese companies. That relates back to the dual core that we talked about in our first video. And it's also related to the fixed income market, which is what we talked about in our second video. So all of these things are related, and just picking renminbi to talk about is a little difficult, but we wanted to give a little bit of context about the renminbi. So without getting into a 9th-century discussion about paper money in China, we did want to say that the currency was pegged between 1997 and 2005 at 8.3, and the peg was removed, and the renminbi slowly and persistently appreciated to 6.05 in 2014. And then in 2015, the IMF declared that China was not a currency manipulator, and the currency reversed course to about the 705 level by 2019, and has been appreciating again, and now sits at about the 6.5 level. So given that context, peng.guo, what do you think from the foreign perspective is important about renminbi going forward?
The first thing is if I hold the renminbi, what I can do? I think the simple answer is you can go to China and purchase the merchandise. And secondly, if the hold the renminbi as like the financial asset, so you will worry about is that is that this a stable asset or is it a high volatility asset? So compare with other countries, renminbi is a relative stable financial assets. And then the third thing is any currency is really reflect the country's economy. So if you believe this country is growth or is that is worse to hold its currency.
So years ago, when China was talking about the internationalization of the Chinese yuan, the renminbi, there were a lot of people saying, well, you can't have an internationalized currency when you have these currency constraints. And the second thing is you can't have an international currency unless people want to hold your currency. And most recently, the owner of Chinese debt, foreign holders became 10% of China foreign debt, which is a huge number in what it was years ago. So that's the first step of internationalizing the renminbi. I mean, we can be very positive, but in practical terms, it's still very difficult to run an international business when you're dealing with renminbi. Just people that are overseas, getting money in and out, there's still constraints, there's still capital constraints. Individually, there's still capital constraints, and those unfortunately haven't gone away. But the fact that large institutional investors want to hold your currency is a huge step in the right direction.
I fully understand this is a kind of challenges for the foreign investors. I think why the government make the policy not just for the foreign investor, and more worried about the domestic investors. Yeah. So they cannot make the huge change in the short term. So, but the market is smart, and also the government is smart. That's why they have the free trade zone. That is why, like the Hong Kong become the offshore market for China.
Right. Well, there's all these competing factors. It's who wants to own your currency, who's using your currency. At one point, there was a lot of discussion about trade in renminbi, and I know China is trying to use renminbi as the trading currency. So manufacturers on the mainland don't have a currency risk anymore, so they can use their renminbi to settle contracts. Although that really hasn't been that successful. I mean, if you look back at the SWIFT payments, there's been more there were more transactions in 2016 in renminbi than there are today. So some things have been successful, other things have not been successful, but definitely from an investment perspective, renminbi denominated assets are a growing investment class for foreign investors.
Yeah, that's absolutely right.
So for forward looking this week, we wanted to talk about the Olympics, and Senator Romney came out and said something interesting about the 2022 Olympics. And he's pretty shrewd because, after all, he did organize the Salt Lake City Olympics in 2002. So he knows what he's talking about and has a lot of connections in the Olympics and the IOC. So what he said was we should support the athletes, but we shouldn't support a lot of the geopolitical and the ideological aspects of the Olympics. And I thought that was an interesting point because canceling Olympics doesn't work. It just penalizes the country that cancels the Olympics. It doesn't penalize the host country. So I thought it was an interesting aspect, and it's something that we'll have to watch going forward. As somebody who attended the 2008 Olympics in Beijing, I can say the Chinese government did two very impressive things. One, they eliminated traffic, and two, they eliminated pollution. So most of the Beijingers at the time thought, hey, why don't we just host the Olympics full time? Life will get a lot better in Beijing. So peng.guo, what's your thoughts about what Romney said and the overall aspect of the games and the politics around the games?
I think Olympics is a good way to communicate. People get to know each other and to understand what they really care about each other and try to apply that to the positive way rather than against each other.
I would agree. I think from an investor perspective, we want to stay mindful. If Budweiser and Nike don't go to the 2022 Olympics in Beijing, you'll probably have to look out for consumer side, which is actually an asset class that's done very, very well over the last few years. So the consumer is pretty strong. And if foreign brands are not going to go and showcase at the Beijing Olympics, then you'll probably look to local brands that will get an international platform.
That's exactly right. So China is a growing market. So people try to push China to make some of a change, but that should use the appropriate way to do it. Obviously, you just want to get the result, you rather want to push China to the wrong side or opposite side.
Thank you for joining us for another episode of Primary Source China Investment. Please subscribe and look for our videos every Monday morning. Thanks.